What's up, everybody? Steve here. Today I'm going to talk about some tax tips related to short-term vacation rental properties. Now, before we jump into this, I do have to disclose that I'm not a real estate attorney. I'm not a tax accountant. I'm a real estate broker, and I utilize a lot of tax advantages for my own benefit, so I'm not taxed as much on any kind of income properties that we have. So let's jump into it. The first one, which actually I didn't even know that this was even a thing, but it's called the Masters Exemption. And basically how it came about was in Augusta, Georgia, where they actually have the Masters golf tournament. They have a lot of short-term rentals for that 14-day period. So in this exemption, which I found very interesting, basically you can rent pretty much any property that you have no more than 14 days, and you guys will not be taxed. No, you won't have any income taxes on that revenue for that 14 days. Now, it can't be 15 days. It can't be anything longer than that in any given year. So basically, every year you can rent your property up to 14 days, basically tax-free. Now, the other exception to that is you actually have to utilize the property as well yourself, you and your family, for at least 14 days in any given year as well. Now, the second thing is you have to treat this as a business. So if you do have a short-term rental property or vacation rental property, you're going to want to treat this exactly like a business. You're going to want to track all of your business expenses, which we'll get into. You're going to want to track all of your income associated with the property, and overall, just a simple profit and loss statement to show everything so it's very clear as day, especially when you guys provide this information to your accountant. Now, the third thing are expenses and tracking expenses, and also having the documentation associated with the expenses that you guys can stow away or scan and keep into a folder for you and your accountant to reference back to. But good accounting in terms of keeping track of all expenses associated with your short-term rental property. Now, this includes but not limited to the following. So you got improvements of the property. So anytime that you guys make any significant improvements to the property, for example, a condo we recently did, we did a brand new shower enclosure. We put impact windows as well. So any kind of major improvements. Supplies for the property, that can include everything from new linens to toilet paper to cleaning supplies and so forth, sheets, all the business expenses associated with actually visiting the property. I'm sure that you guys probably will be utilizing your property and probably staying there as well. And I think that you should be able to utilize some of that as a business expense, not just for leisure, but also you're there, you're checking out the property, maybe you're doing some improvements, maybe you're checking out the area, maybe you're checking out other real estate. So talk to your accountant about that, because there could be benefit tax savings even going to your own property and utilizing it. Interest, if you guys do take on debt, interest on a loan, you got real estate taxes, you got insurances as well that you can write off, whether that's general liability or wind or fire insurance, whatever the case is. You got depreciation. Depreciation is very huge. Talk to your accountant about that in terms of how quickly you want to depreciate the asset. Insurance, I already spoke about that. Site and marketing fees. A lot of the websites that you guys are going to market on, it's going to require payment, or you're going to have to pay out per transaction. So all that should be a write-off for you guys, as well as mileage. If you guys are driving to your properties, certain mileage, or maybe you're renting a car to go check on your properties if you guys had to fly to a certain destination. And also a home office. As a licensed real estate broker, I've always had a home office, so I'm able to write off a percentage of my expenditures associated with my home. And that's no different for you guys as well. If you guys are renting out properties, you own properties, you're going to have a certain designated area inside your own home that is working on this basically your real estate investment portfolio. So you might be able to write off a certain part of your home expenses for a home office. Another thing correlated to expenses as well are basically anytime that I'm traveling to different areas. Like prime example, we're going to be going to Bimini in the Bahamas it is leisure, but also I'm going to be checking out other properties in Bimini that could potentially be part of our portfolio as well. So I'm going to speak to my accountant to find out exactly what I'm going to be able to write off as well in terms of that trip. And we are going to be meeting with a real estate agent out there. We're going to be looking at properties. So I'm sure I'm going to be able to have a certain portion of that trip, even though it's going to be leisure as well, a certain portion of that trip, maybe the stay accommodations, maybe the trip itself in terms of the ferry from Fort Lauderdale to Bimini, maybe some even the food and so forth. And maybe if we take the real estate agent out to lunch, certain expenses like that. Again, I'm going to talk to my accountant about any trip that I take and what I could be writing off if I'm going out and trying to build my portfolio. So this happens a lot for us as well because we do travel around a lot, even throughout the state of Florida, and we're always looking at real estate. So some of that is a write-off for our business. Next thing is bed taxes and the appropriate entities. For example, the state of Florida, we have a 5% bed tax and a 6% sales tax. This is very important. This gets charged back to the guest, but it is very important that you guys are collecting this money and then also paying the appropriate entities. I've failed big time. If you've been following this channel, you probably have seen other videos that I talked about when I was actually managing my own vacation rental properties. I was not paying the appropriate entities the right amount of money. I got all sorts of fines, and it was just a damn mess. So if you guys are doing short-term rental, make sure in your state you guys are collecting the appropriate fees, your state or district. I mean, some counties might even be different. So make sure you guys are doing that research thoroughly to ensure that you guys are collecting the right amount of taxes from the guests, and then also where to send the money to. The next thing is there are benefits for being in business for yourself as a full-time real estate investor, and this is just something that I wanted to add to. If you guys are on that, say, teetering point of maybe you have a job and you have a good portfolio of real estate, maybe annual real estate as well as short-term rental properties, there may be all these additional write-offs that you guys could assume being basically self-employed and a full-time real estate investor, that it might offset the amount of money that's coming in from a job. So if you guys are in that middle ground where you have a portfolio of properties and you're thinking about possibly quitting your job and doing that full-time and managing your real estate, then it might be opportune time to talk to your accountant to see if it might be wise to ditch that occupation and go full-time and go all in on real estate investing. Anyway, if you guys got any value out of this, I appreciate a big thumbs up. Also, check out the videos at the end of this because I talk about different tips on increasing revenue for your Airbnb or vacation rental properties. And I'll see you guys over there. Thanks a lot.